The dollar is the global reserve currency. It always has been the global reserve currency, and it will always be the global reserve currency. And I said, David, I feel like I'm in Whitehall in 1913 listening to John Bull say, sterling is the global reserve currency and it always will be. And of course, it was dead by 1944. It started to die as early as November 1914 at the beginning of World War I. So I've warned them, I've explained it to them, but now we're at the point where that's actually happening. The kinds of things I described. So it's like you hit the punching bag, you hit it. At some point, the punching bag gets up and walks away. It's like, I'm not going to stand for this. And the key thing, there's always a snowflake that starts the avalanche, as I've described, was when we froze the reserves of the Central Bank of Russia. I know the war on, got it, financial sanctions, they were probably inevitable, but Russia's not Syria. It's the largest landmass in the world. It's the largest nuclear arsenal in the world. It's the 12th largest economy in the world. It has the best gold to GDP ratio in the world, which is another metric we can talk about. But if you want to back up your economy with real money, their gold to GDP ratio is 4 times what the United States has. The list of strategic metals, grain exports, oil, of course, one of the 3 largest producers, fertilizer, nitrates, et cetera, that they export. And they're one of only 2 countries, the other one being France, that will give you nuclear technology if you want to build not a weapon, but a nuclear power plant. The U.S. is kind of out of that game. So it's not some punk country. And they had over $150 billion in U.S. Treasury notes. They've been getting away from them. And Vera Nabiullina, who's the head of the Central Bank of Russia, she's the only central bank in the world who knows her job. She very prudently has quadrupled the Russian gold reserves since 2009, so 14 years. She's taken it from 600 tons to close to 3,000 tons. They did it very transparently. They had dealers in London. They had standing orders. They said, we don't want to disrupt the market. By the way, don't try calling up and ordering 400 tons of gold. You'll just hang up the phone. But 10 tons a month, sometimes 30 tons a month. But for over 10 years, it added up to the position we're in today. And guess what? It's physical gold. It's in safe storage near Moscow. It's not digital. You can't freeze it. You can't seize it. But it's money good. But we confiscated or froze their U.S. Treasury securities because they are digital. There hasn't been a paper Treasury security since 1980. And the ledger is maintained by the Federal Reserve and the Treasury. By the way, keep that in mind if we talk about central bank digital currencies, because you're back to who runs the ledger. But for U.S. Treasury securities, that ledger is digital. It's run in the United States. People, we're in a debt ceiling debate right now. The Congress is debating raising the debt ceiling. And if you didn't do anything, X date, when the Treasury actually goes broke, and we default on the debt. And everyone's all spun up about this. The U.S. defaults on this debt all the time. And people don't seem to notice. If you're Russia and you buy Treasury notes and bills in good faith, and they're supposed to pay as agreed at maturity, and all of a sudden the issuer says, sorry, I'm not paying you. If that's not a default, I don't know what is. Maybe selective. Maybe I'm just picking on you and not the whole market. But that's the default. 1933, when Roosevelt devalued the dollar by 75% and took gold from $20 an ounce to $35 an ounce, confiscated all the gold, and so paper money was no longer redeemable into gold. That's a default. That's a default because Treasury securities at the time used to have a gold equivalent, and FDR just tore it up. So, and then 1977 to 1981, inflation was 50%. All my Austrian libertarian friends, they go, well, since 1913, the dollar has lost 95% of its purchasing power, which is true, but so what? Incomes are higher. But there was a 5-year period, not 100 years, where the dollar lost 50% of its purchasing power, which meant if you held a bond, the real value of your bond was cut in half. That's a default. See, there's just lots of different ways to default. The U.S. does it all the time. Getting back to your other question, Constantine, about inflation being the real end game. So anyway, we pushed Russia. And by the way, Russia's held up very well. Their economy is going to outperform the United States in 2023, according to the IMF and others, World Bank. The ruble is strong. It was, for a long time, stronger than it was before the war. So they're feeling the pain. I'm not saying there's no pain at all, but they're getting through it brilliantly, and they're going to outperform the U.S. this year. But the rest of the world took notice. So let's say you're China, or Saudi Arabia, or Turkey, or Brazil, or and these are major countries. They're saying, hey, the U.S. just froze the reserves of the Central Bank of Russia. What if Janet Yellen gets out of the wrong side of the bed and frightening thought, but says they don't like me, they don't like my policy, they don't like what I'm doing in Taiwan or the Kurds or women's rights, whatever, pick a topic. They could do that to me. And so people are like, okay, now we really do have to get out of the dollar, not as an economic matter, but as a national security matter from their perspective. And I'm going to give you an answer, and everyone rolls their eyes and go, well, it's obvious. The answer is diversification. Everyone goes, oh, we know that, diversification. But they know the term, but they actually don't know what diversification is. And I'll give you an example. I run into people all the time that go, well, Jim, I'm fully diversified. I have 50 stocks in 10 different sectors: telecommunications, semiconductors, consumer non-durables, metals and mining. And I go, you're not diversified. You may have 50 stocks, but you're in one asset class called stocks or equities. And they're all going to go up together, or they're all going to go down together. And the more stressful the condition, the more reason you have to be concerned about it, the higher the correlation. On any given day, some stocks go up and stocks go down. But when you dial the stress meter up, they all tend to move together. So I don't care about your 50 stocks, your 10 sectors, that's not diversified. So what does real diversification look like? Have a sleeve of equities if you want, that's fine. I would say I look hard at oil, natural gas, natural resources, agriculture. Again, kind of equities that have hard assets behind them that will do well in inflationary times or even in recessionary times, because you need all those things no matter what. Then a slice of real estate. I wouldn't be in commercial real estate, but residential real estate, income-producing real estate, farms, etc. That's good. I have a big slug of cash. And people go, well, cash doesn't have any yield. Well, lately the yields, you can get 2-3%, in like a CD. But even in a simple savings account, it is quite low. It's kind of less than 1%. But people don't understand the value of cash in a couple of respects. Number one, in a deflationary environment, we're not there yet, but we could hit that if the recession gets bad enough. Cash could be your best performing asset. It doesn't go up in nominal terms, but it goes up in real terms. If you have 2% deflation, your cash is worth 2% more in terms of purchasing power. But the real value of cash is optionality. And this is not well understood. I shared an office with Myron Scholes for 6 years, so I see options under the pillow, so to speak. But if you're the one with cash, when things, first of all, it'll definitely preserve wealth. So if things are falling all around you, your cash will be what it's worth, unless you're in Silicon Valley Bank. It's a separate issue. But although they got bailed out. But so it'll preserve wealth, even if it's not a high performer. It'll do very well in deflation. But the real benefit is when everything else is falling apart, you're the one who can go shopping.